Trade between the United States and Mexico isn't just about goods crossing borders. It's a complex, high-stakes relationship that impacts millions of jobs, industries, and even political futures. But right now, that relationship is on shaky ground. Mexico is threatening to cut off vital oil and automotive supplies, and the US is pushing forward with tariffs that could ignite a full-blown trade war. The stakes couldn't be higher. If this conflict escalates, the consequences will ripple through everything from gas prices to car manufacturing, agriculture, and even upcoming elections. So what's really happening, and who has the upper hand in this economic standoff? Let's break it down. Mexico has a significant advantage in this trade dispute because of its energy exports. The country supplies a substantial portion of crude oil to US refineries, particularly in Texas. This isn't just a convenient agreement, it's essential to keeping American energy flowing. If Mexico's state-owned oil company Pemex decides to cut or restrict this supply, the impact would be immediate and severe. Fuel prices could spike, inflation could rise, and manufacturers and transportation companies would face soaring costs. The problem is even bigger than just price increases. Many US refineries are specifically designed to process Mexican crude, meaning replacing it wouldn't be as simple as buying oil elsewhere. A sudden disruption would force the US to scramble for alternatives, driving up costs and leading to shortages. And let's not forget the political impact. High fuel prices are never good news for any administration, especially during an election cycle. If Americans start paying significantly more at the pump, the White House could face serious political backlash. The North American automotive industry is deeply interconnected, with US, Japanese, and European automakers relying heavily on Mexican parts and labor. Every day, hundreds of trucks cross the US-Mexico border carrying essential components like engines, transmissions, and electronics to American factories. If Mexico imposes tariffs or limits exports, the entire supply chain could grind to a halt overnight. Companies like General Motors, Ford, and Tesla depend on Mexican parts to keep production moving. Without them, they'd have to scale back operations, which could lead to job cuts, factory closures, and higher prices for consumers. And it's not just the car companies that would suffer. The economic fallout could hit suppliers, logistics companies, and even dealerships, causing widespread disruption. This is why Mexico has such strong leverage. Any restrictions on auto parts wouldn't just hurt American businesses, they'd hit industrial estates where thousands of workers depend on the auto industry. The result? More political pressure on Washington to rethink its trade policies. Speaking of pressure, let's take a quick break. If you are finding this breakdown insightful, make sure to like and share this video. It really helps support the channel and keep us bringing you more in-depth analysis. Mexico's strategy isn't just about energy and auto parts. It also targets a key sector of the American economy, agriculture. US farmers rely heavily on Mexican market, exporting billions of dollars worth of products like corn, soybeans, and beef. If Mexico slaps tariffs on these goods, it could devastate rural America. Midwestern states in particular would feel the pain. Many farmers are already struggling with tight profit margins, and losing access to a major buyer like Mexico would make things even worse. This could trigger job losses, farm closures, and even a political shift, especially in states that have traditionally supported tariff-heavy policies. If trade tensions continue, Washington will have to weigh the economic costs against its hardline stance. What do you think? Should the US stick to its tariffs, or is the risk too high? Let me know in the comments. I'd love to hear your take on this trade dispute. Despite the rising tensions, Mexico isn't rushing into full-scale retaliation just yet. President Claudio Sheinbaum has emphasized a commitment to the United States-Mexico-Canada agreement and is pushing for a diplomatic resolution. This cautious approach allows Mexico to keep pressure on Washington without immediately escalating the conflict. A crucial upcoming call between Sheinbaum and President Trump could be the moment that determines the next steps. If Trump refuses to back down, Mexico has indicated it will move forward with formal countermeasures. This is a delicate game. Both sides are trying to appear strong while avoiding a full economic meltdown. Trade between the US, Mexico, and Canada is highly interconnected, and any disruption in US-Mexico trade will have ripple effects across the continent. Canada is closely watching the situation, and if tensions escalate, it could also impose retaliatory tariffs. Meanwhile, China has just announced a 15% tariff on American goods, adding yet another layer of economic pressure on the US. All of this raises a critical question. Is the US prepared for a multi-front trade conflict? Rising tariffs, supply chain disruptions, and inflationary pressures could spell trouble for the broader economy, leading to a stock market downturn and increased financial uncertainty. At the center of this standoff is the issue of energy dependence. President Trump's America First narrative emphasizes energy independence, but the United States' reliance on Mexican crude oil exposes a major vulnerability. Meanwhile, Sheinbaum has framed Mexico's position as a matter of national sovereignty, boosting her political standing at home while pressuring Trump to rethink his approach. Both leaders are using nationalist messaging to rally support, but the economic realities remain unchanged. Disrupting trade comes with real costs. Trump's push for tariffs is a high-stakes political move. He wants to appear tough on trade, reinforcing his image as a leader who prioritizes American interests. However, if Mexico retaliates, the blowback could be severe. Rising prices, disrupted supply chains, and job losses in key swing states could ultimately hurt his electoral prospects. Manufacturers and farmers are already feeling the pressure. If the trade war continues, the economic pain could become too much to ignore. The big question now is whether Trump will stay the course or adjust his strategy to avoid economic fallout. Either way, the coming months will be critical in shaping the future of US-Mexico trade relations. This is more than just a trade dispute. It's a battle of economic leverage, political strategy, and national interests. Mexico has powerful tools at its disposal, from energy supplies to automotive exports and agricultural tariffs. The US, meanwhile, is banking on its economic might to push Mexico into compliance. The big question is, who will blink first? Will Trump soften his stance to protect American jobs, or will Sheinbaum's pressure force a shift in US trade policy? The answer could redefine North American trade for years to come. If you have stuck with us this far, you are awesome. Don't forget to like, subscribe, and hit the notification bell so you don't miss any updates on this evolving trade war. Thanks for watching, and we'll see you next time.